Stocks trade in a range near the day's low now ahead of the weekend, and big earnings from Reliance Industries and ICICI Bank. IT and pharma stocks managed some gains, but realty and metals take a beating. HCL Tech reports a mostly in-line performance in a relief for investors after Infosys' weak showing. The company tells CNBC-TV18 it saw some cancellations and there could be customer focus on pricing ahead. Aditya Birla Group Chairman Kumar Mangalam Birla rejoins the board of Vodafone Idea 2 years after he stepped down. The street draws confidence from the move, pushing stocks of VI and Indus Towers up. And private life insurers see bumper March new premium collections rising on a tax break expiry, but stocks slip on fears that the best is behind. Even ICICI Prudential Life Insurance skids despite a strong showing. Bajaj Auto Chief Rajiv Bajaj says he doesn't see the logic of a 1.5 lakh rupee two-wheeler subsidy, adding that India can't build a future on SOPs. He also doesn't see the phasing out of FAME having a long-term impact. On another note, he reveals the Triumph model will be unveiled on the 27th of June in London. Hi guys, good afternoon and welcome to Business Lunch. I'm Pavitra. Those are all of the top headlines that we have for you this afternoon. It is a lot about individual stock-specific action because once again on the frontline index, there's not too much happening, although there has been a bit of a slip that's come through in the past few minutes. So we're now around 50 points in the red for the Nifty, 0.3% gone there, and pretty much at the low point of the day. We're seeing a bit of a reversal in terms of what's happening with the broader markets. All through this week, we were talking about how, the broader markets are holding up a lot better. Today, you're seeing bigger cuts come through in the mid-cap and small-cap space. So the mid-cap index down over 220 points right now. Small-cap's also seeing a near 0.7% cut. The advanced decline is pretty heavily tilted in favor of the declines right now. So that's something that we are tracking as well. In terms of sectoral moves, you've just been seeing this kind of rotation play out the entire week. So today it is really the real estate stocks and metal stocks which are a bit weak. But on the gaining side, you have ITC, which is, by the way, the top gainer on the Nifty once more. So that's doing very well. And for tech, you have Wipro, TCS, HCL Tech, which are all doing very well. Cyient from the mid-cap space as well. They've seen a big recovery from the lows. But on the downside, something like a Tech Mahindra still seeing cuts, perhaps because of the downgrade that came through from JP Morgan. So that's what's happening in terms of market action. We will talk more about that, but first up, let's begin by talking on exactly this on the tech stocks. The third of the four major IT companies posted results, that's HCL Tech, and it reported quite a steady quarter. Earnings were also in line with what was expected. The revenue growth guidance that the management has provided is better than what was expected, in fact, and the management has highlighted that the deal pipeline is also near an all-time high. So let's listen in to what they had to tell us. This is the word coming in from MD and CEO C. Vijay Kumar on the numbers and the outlook.
The year started very well. Second half has been a little soft. And in spite, if you compare it to our expectations, the couple of verticals, tech and telecom, primarily in our engineering and R&D services, the revenues came lower. Maybe about $20 million came lower than what we expected in engineering and R&D services. And that was mostly attributed to the tech and telecom verticals. As we move forward, I do think most verticals have stabilized based on the rigor of execution and the ramp-ups that we have done for some of the large deals that we won in financial services. We expect FY24 to be a very strong year for financial services. Yeah, see, our revenue in BFSI is about 20, and last quarter was about 21%. And of that 21%, only 1%, less than 1% is exposed to smaller banks and the bank that you are referencing. And even within that, there is a run this business spend and the change. So it's really negligible.
All right, that is the word from the HCL Tech management. But staying with IT, the other big earnings that came through were from the mid-cap IT space. Cyient surges after it posted a good set of fourth quarter numbers. The company posted strong growth in the revenue as well as on the margin front. There's been an expansion. And their FY24 guidance is also pretty much in line with the constant currency revenue growth seen at 15 to 20%. This is for FY24. And for margins, they see a rise of 100 to 200 bips. So earlier we spoke with the management, the managing director and CEO at Cyient. So let's listen in to what he had to tell us.
We've taken into account some degree of macro uncertainty, which we all can't escape. But taking into account some degree of macro uncertainty, we're still quite confident that we have a run rate towards that number essentially in Q4 of this financial year. There is still a lot of work to do, but we believe, will we be there? Surely thereabouts, but we're working hard towards getting there. So that's still a line of sight. There are some obvious risks in areas like semiconductors where there is a slowdown that is anticipated. But I think now we have a well-diversified portfolio. If you look at the 4 reporting sectors that we have, which is transportation, sustainability, connectivity, and new growth areas, they're all very balanced. I mean, they're all, a fourth each of the services business. Or if you add the manufacturing business, that's also about the same scale. So these 5 pillars that we have, I think, are working out very well. And let's face it, right? There were times when some of the sectors that we were in did not perform very well compared to the others in the market. And I'm referring to the aerospace sector here particularly. But now that sector has come back quite strongly. So I think we've positioned ourselves quite well.
All right, that is the word coming in from Cyient. But let's now talk about the big earnings that we have to watch and that will come out either post-market hours today or over the weekend. The first one is, of course, Reliance Industries, all set to report Q4 FY23 numbers this evening. So Sonia standing by the ball with all of the expectations this time around. Sonia.
Well, it's a big day. Reliance Industries is all set to announce its Q4 earnings. Remember, the stock is down 7% in 2023 so far, but it's a decent quarter expected this time around. First, let me take you through all the key numbers that you can watch out for. On the revenue front, it's about an 8.5% growth that we're looking at compared to last quarter. While on the EBIT, the EBITDA could see a growth of around 5.2%. Margins could be a tad bit under pressure compared to what Reliance did last quarter. But on the profitability front, it's a 12% growth that we're looking at somewhere around 17,700 crores. Now, as I said, both the consumer as well as the commodity businesses for Reliance Industries have done decently well this time around. First, let's take a look at the oil to chemicals business, which is the key reason for the recovery this quarter. There's a sequential recovery that we're expecting for a couple of reasons. A stronger base gross refining margins and lower windfall tax is something that can aid this segment for them. In fact, looking at the gross refining margins, Singapore gross refining margins improved to $8.2 a barrel in Q4 compared to $6.3 a barrel last quarter. There's also a demand improvement seen because of the China reopening, and that has aided the numbers this time around. In the consumer-facing businesses, Reliance Jio has slowed down a tad bit, so we are seeing the revenue and the profitability growth moderate for them. In fact, it could be the lowest in the last 7 quarters. On the average revenue per user as well, it could be absolutely flat this time around at 178 rupees. A couple of reasons for the slowdown, but primary reason is that there's been an absence of a tariff hike, and that has caused Reliance to see a slowdown in its growth rate in the telecom business. Let's move to retail now. Retail growth is expected to be about 6% on a sequential basis, coming in at a little over 46,650 crores. These are the recommendations put out from Nomura. And on the EBIT side, we're expecting about 3,800 crores versus 3,600 crores last quarter on a sequential basis. So clearly, as you've seen, there's a decent growth expected. Some of the businesses like Rel Jio could see a bit of a slowdown, but it could be offset by good growth in the oil to chemical space.
All right, Sonia, thanks a lot for taking us through the overall estimates, but we have been telling you about the individual verticals as well. So let's talk about Reliance Retail now. Like Sonia was pointing out, we are expecting to see strong growth this time versus last year. So Mangalam is here with a little bit more of a deep dive on what we can really expect from the retail vertical this time around.
Well, for Reliance's retail business, it's already been on a big growth path. So this time around, year-on-year growth as well as quarter-on-quarter growth is something that the street is working with. Remember, usually post the third quarter, there is a slump, but the company's store expansion will offset this post-festive season slump as well. And year-on-year, the numbers will look much better because of, one, the network expansion, and secondly, a strong, favorable base for the company because of Omicron-related issues in the same time last year. So quarter-on-quarter, revenue is likely to grow by 4.5%. For the first time, it crosses that 70,000 crores per quarter mark. The EBITDA grows by 2%, just under that 5,000 crore mark, which means that the margins for the company meander around that 7% mark itself. These are Nomura's expectations. Year on year, like I said, a 22% growth in the revenue looks much better, a 31.5% growth in their EBITDA as well. The company's foray into the FMCG business, Independence, the brand that they launched a couple of quarters ago, is something that we'll be watching out for. Apart from that, they've expanded their horizon as well, entered into the personal care and home care categories too. And more than anything else, they've recently launched the beauty care platform too. So these are some things that we'll be watching out for. The heat wave is on, so the acquisition and launch of Campa as well as Socio is something that the street will be watching out for, but that may be more of a first quarter phenomenon, and eventually Metro AG's India business coming into them is also going to help the retail business grow the growth path that it already is on.
All right, that is on Reliance Retail. Mangalam, thanks for that. Standard Reliance disclaimer on your screen. The channel that you're watching is owned and operated by Reliance. But with that, we are going to talk about the other big set of earnings that you need to watch. That is from ICICI Bank. They're due to report their fourth quarter numbers tomorrow. By the way, the stock has also slipped quite a bit. Like you can see, it's at the low point of the day right now. So we are seeing a bit of a slip ahead of its fourth quarter tomorrow. So Abhishek is standing by to tell us what we should really expect from the banking major. Abhishek.
ICICI Bank is expected to report numbers tomorrow, and as per analyst poll, the street is anticipating the highest NII growth rate in last 8 years, which will lead to all-time high in terms of quarterly profits, nearly about 8,900 to 9,000 crore as per our poll. So what are the key things to watch? Loan growth, that is expected to be around 18% YOY and more than 4% sequentially, which is as per Phillip Capital estimate. The net interest margin is expected to improve. So quarter on quarter, Phillip Capital is estimating net interest margin to be at 4.7% versus 4.65% in the previous quarter. This 4.7% could be a 8 to 10 year high in terms of net interest margin or at all-time high. So provisions to decline quarter on quarter due to decline in stress assets in the balance sheet. Phillip Capital estimates slippages at 5,000 crore. Previous quarter, it was a little more than 5,720 crore. Phillip Capital also expects, asset quality to improve. So gross NPA as per them could come down to 2.9% when compared to 3.1% in the previous quarter. Now watch out for two key numbers how that book moves. One is the watch list, which is about 0.57% of the loans, and the restructured book, which is about 0.5% of the loans. So our poll suggests NII growth of nearly 36% YOY and about 4% sequentially. We are working with a profit growth of nearly 28% YOY and about 8% sequentially. Back to you.
All right, Abhishek, you have a busy Saturday cut out for yourself tracking the results of ICICI Bank. We will, of course, react to these on Monday. ICICI along with Reliance. Also, Hindustan Zinc will be posting results. So that's everything that we're tracking on Monday. But for now, let's talk about the electric vehicle space. There's a lot going on here. We've been telling you that the Indian government is not in favor of extending the EV subsidy scheme, that is the FAME scheme, beyond March 2024. So, however, we do know that a final decision on this has not been taken, but this is the talk so far. Earlier today, we spoke with Rajiv Bajaj, who is, of course, managing director at Bajaj Auto, to get his take on the subsidies and pricing cap for these vehicles. And he says that he's not really a fan of subsidies of any kind. Check it out.
I have not understood what the logic is for a cap on two-wheeler pricing, for example, to be 1.5 lakhs of rupees, because that is the bone of contention as I understand it. I mean, today you can buy a 20 lakh car and get a 2 lakh FAME subsidy on that, and that's absolutely fine. But I cannot buy a 20 lakh motorcycle and get a 2 lakh subsidy on it. Why? 50,000-60,000 is, of course, not small for any consumer. In the last 3 years, the prices of two-wheelers have gone up by about that much, as you know, for various reasons. And you've seen how that has impacted demand. I am not a fan of subsidies of any kind. And I do not think India is going to build a EV future based on subsidies. Subsidies going away, in my view, should not really have that big an impact in the long run, because the future of EVs in India will be built on the back of sound strategy, not subsidy. Subsidy is not a strategy, and in my view, subsidy disrupts strategy, subsidy masks reality, and subsidy blunts innovation.
All right, that is the word coming in from Rajiv Bajaj on this entire EV space. But with that, it is time for our first short break on this show. When we come back, we're going to talk about the entire world of AI, which is getting smarter and hotter. Is generative AI a risk to tech companies? We'll talk about that in our special segment, Clutter Breakers. Welcome back. You're still tuned into Business Lunch, and let's talk about ChatGPT now, because it has clearly become the latest buzzword no matter which tech company we talk to, and it is being heralded as the future. But can it really be a big disruptor? Will it eat into IT jobs as well? Rima is here to bring us a roundup of what we know so far and what some brokerages also are saying on this. Rima.
So let's start with what generative AI like ChatGPT can do. Well, it generates content that is indistinguishable from human-created output. Think of it as a software writing a software. So you no longer need handwritten code written by engineers to develop a code for an app, for instance. You can do it via prompts. So the question is, if you can write code, I can write code, then what happens to all of India's engineering talents? Is there a risk to software jobs? Well, it's hard to say right now conclusively, but experts do believe there is a possibility that lower-end software jobs can get impacted. There was a recent Goldman Sachs report which said the shifts in workflows triggered by these advances could expose the equivalent of 300 million full-time jobs to automation. But this is a number which is across industries, not only for the technology industry. But remember, till AI gets very sophisticated, extensive human input will be required to validate the output, to check the output generated by, say, a ChatGPT. So how can this play out for technology companies? Well, for starters, IT companies may need to hire fewer people. That will help with their productivity. And there is also a possibility that at some point, the productivity benefits generated by generative AI can get passed on, which means customers are saying, give me some discounts because now you need less money to write that code. From an enterprise point of view, that's the customers of the IT vendors. Will enterprises cut their technology spend because writing code, software development now takes less effort? Or will they keep their technology spend intact and use the productivity savings to focus on more technology projects? And also, the bigger and the more important question is, when does the significant impact of AI generative advancements start kicking in? Does it happen as soon as 3 to 6 months, or is this something which is going to take time, 2 to 3 years, to become sophisticated? And I don't want to sound apocalyptic, and just to balance out the other side of the argument, worker displacement, which is generated from automation, historically has been offset by the creation of new jobs and the emergence of new occupations following the technological innovations. This is something that Goldman Sachs says, and they believe generative AI will complement and not substitute the workforce.
All right, Rima, thanks a lot for getting us that very interesting piece on generative AI. But with that, let's move on and also talk about UK-based coffee chain Pret A Manger, which has opened its first store in Mumbai's BKC area. The coffee chain opened up in partnership with Reliance Brands and will also open a store in Gurugram in a bit. So Shilpa is here with the details on that. Shilpa.
UK-based coffee chain Pret A Manger has opened its doors to India with the launch of its first store here in Mumbai's BKC. Now, this foray into India is in partnership with Reliance Brands and is set to take on the likes of Starbucks, Barista, etc. Now, this store is a recreation of London's Pret coffee shops, which are spread over large dining areas with an area of over 2,500 square feet and offers fresh on-the-go food along with coffee. Now, this BKC store will be followed by another store in Palladium in the next 15 days, and another coffee shop will open 15 days later in Gurugram. In Mumbai, Shilpa Ranipeta.
Shilpa, thanks a lot for that. That's definitely exciting news for a coffee enthusiast like myself. So I'm looking forward to checking it out. But with that, let's also bring you some important national news. This comes in from the Poonch district of Jammu and Kashmir, where 5 soldiers were killed and 1 injured after an Indian Army vehicle was fired at by terrorists from the Lashkar-e-Taiba group last evening. And this is according to Jammu and Kashmir police. The terrorists used assault rifles and rocket-propelled grenades to fire at the vehicle, leaving the army truck engulfed in flames. Remember, this is the 4th such incident that has involved casualties in the Poonch district. All right, very unfortunate and tragic news coming in there from Jammu and Kashmir. But with that, we are going to get into a short break now. On the other side, what we're going to talk about is the withdrawal of the blue. Welcome back. You're still tuned into Business Lunch, and it has finally happened. Thousands of Twitter accounts have lost their verified status as part of Elon Musk's plans to push for a verification through a paid monthly subscription plan. So several celebrities, business leaders, politicians have all lost their blue ticks, while some have, of course, retained it by either paying for the subscription. So Kanishka Sarkar is here with more on that.
Well, this time it's for real. If you haven't paid or Elon Musk hasn't paid for your Twitter Blue subscription, or you're not ahead of a state, then you've lost the blue tick against your Twitter handle. After several false starts, Twitter has finally pulled the plug on legacy verified accounts. Be it Shah Rukh Khan, Rajnikant, Virat Kohli, Sachin Tendulkar or Anand Mahindra, even political accounts like those of the BJP, Congress leader Rahul Gandhi and many others have lost their blue ticks. International personalities like Beyonce, Pope Francis, Mark Zuckerberg and Donald Trump have lost their ticks too. In fact, even Twitter's founder, Jack Dorsey, doesn't have it anymore. All of them have millions of followers. However, not all celebs have lost it yet. In India, several actors, especially those from southern India, have subscribed to Twitter Blue. Kamal Hassan, Nagarjuna, Mahesh Babu and Junior NTR, to name a few. Apple CEO Tim Cook, singer and actor Rihanna, Indian businessman Harsh Goenka also seem to have paid and retained their blue checks. While Twitter had about 3 lakh verified users under the original blue tick system, many of them journalists, athletes and public figures. But now, if you want a blue tick, in the US you need to pay about $7 a month, while in India it costs around 900 rupees a month or a discounted rate of 9,400 rupees a year.
All right, Kanishka, thanks a lot on getting us all of the details. So that is the latest on Twitter. But as we wind down on this working week and we gear up for the weekend, remember India will be celebrating both Eid as well as Akshaya Tritiya tomorrow. Preparations for festivities have begun in full swing after a month-long period of fasting for India's Muslim community. Meanwhile, jewelers will also be flocked by buyers who will be buying gold on the occasion of Akshaya Tritiya, which, remember, is considered one of the most auspicious days for a new beginning. All right, in case you're not celebrating Eid and you're also not celebrating Akshaya Tritiya, don't worry, there's something for you as well, because for all the Salman Khan fans, get ready. There is a blockbuster weekend coming up as the Bollywood superstar is back after 4 whole years with Kisi Ka Bhai, Kisi Ki Jaan, which releases today ahead of the Eid weekend. The movie is an action comedy and also stars Pooja Hegde and Telugu star Venkatesh. The craze for Salman is likely to nudge the movie to a good box office number as well.
कोई जान देता है, कोई जान लेता है.
So that is the latest and everything that you can do on this weekend as we, wrap up on this week. But with that, I'm going to take your leave on this edition of Business Lunch. Thank you guys very much for tuning in, and we have Mid Cap Radar up in 2.